We are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up SJR. We are on the 12-month time frame. Price action last candle to the right-hand side looked like a bearish red small candle, similar to a doji, indecisive, very small, waiting to that market to grow, or a candle to follow up and push that market up or down. We are looking for price action overall, higher highs, price action overall, lower lows, midpoint, also adding second level highs, third level highs, and then fourth level highs. Current price is sitting at 28.22. So if price works its way up, it can tag that resistance line at 30.44. Before tagging that area, it can tag that midpoint right above price at 29.25. If price action works its way down, it can tag that support line at 26.93, and before tagging that, it can tag that midpoint at 27.75. If price breaks through the white SR lines for support at 26.93, it can head down to the next level, which would be at 93.57. And before tagging that, it can tag 25.29. So let's take a look at what's going on in the market. Where's the market currently at? So the market is currently located at the areas of near overall higher highs, between overall higher highs and fourth level highs. So that market is consolidating with a spike down to a low of the second last candle. So let's take a look at what's happening. So for that market to push up, market came from a area, started off with a bullish green candle. So if we think about adding a imaginary line coming down, have that first leg, second leg, third leg, fourth leg, that creates that double bottom, and this is why the market pushed up. And the market broke, came back to retest. So once that market came back to retest, it created a new structure on this level of the midpoint, which will be identified as coming down in red. The first leg, second leg, third leg, fourth leg, retest, market pushed up. So price is coming from a double bottom and a retest, overall triple bottom, spiked up to a high of the resistance. Overall, it's the highest the structure has ever been near price second and third last candle. And what that is identifying is that the second last candle came back to retest second level highs, and we're going to see that market push up. So let's make this a lot clearer. So if we add second level highs in this area, market identified for the first, second, third, fourth, retest, market pushed up, came back to retest, pushed back up to that area of resistance. Now we're waiting for a pattern to form to see if it's going to break out to the upside or downside. Price actions within the second last candle. So as market is creating that consolidation, I know it's below the previous body, but it's a huge consolidation. Why? We have a huge spike down to a low. So we don't know if this market's going to be respected. Whatever this market's going to do, we are looking for a price action candle to break out the resistance or break out to the bottom of the second level highs of that midpoint to see if it's going to push up, push down, or continue to consolidate sideways. If this market declines, we got to figure out why. So the market drops, the market drops all the way down. Why? Because that market did tag that resistance multiple times. The solid touches would be overall first, second, third, markets coming down. If we receive that engulfment to the second last candle. If you add the wick in there, it's fine sometimes too. It'll identify as the first, second, third, fourth retest, looking for the engulfment. Markets coming down for a double top and retest. Working our way to the 6-month time frame. So price action on a 6-month time frame reading as a bearish red candle, very small, indecisive doji style continuation with the second last candle, third last candle spike down to a low doji style as well. So we can see that second last candle, third last candle is creating an area of that support for that retest, and the market went back up to the high. Why is that market there? Right below, we do have that first, second, third, fourth retest. Market made it right back to that area. If it drops down, we'll see that double top that can form in that area. If not, we'll see that overall break retest, and the market pushing breaks out of here. Then we're looking for the retest of the overall higher highs, and for that market to push up for that incline W formation. Working our way to a 3-month time frame. So on the 3-month time frame, bearish red candle, market's consolidating. So let's read it. If it's respected, that will be identified as the market break came back to retest. So when the market breaks came back to retest, we're looking for a new area to form for that first, second price action is the retest. If it pushes up, follow up with a bullish green candle, you'll see that W formation within that area. Walk it down to the monthly. On the monthly time frame, same area. So to break it down, we have resistance, we have support, and we have that midpoint. And we've seen the W if that market pushes up. That's why it's coming off that retest to see if it pushes up. And if it doesn't, it's coming from multiple pushes to that top, which will be rejected at that area. I just put a line through. So coming up in green, first, second, third, fourth, we have a double top. Retest, market spike down to that low. So price action is coming from a high of a double top and a retest. We received a push, market gaining some support. If it is, if it drops down further, it will just be a, let's go back. If it drops down further, it'll be first, second, third, fourth, retest one. Came back to retest the midpoint. It can drop back down to the support before breaking and retesting and drop it down further. Walking down to the weekly. Price action on the weekly is a bearish red candle, spike up to the high, doji style candle, very weak. So what that market is doing is like a wedge pattern in here. So let's draw it out. If you connect the top, grab the top of that second last candle wick, spike it down, grab the bottom of that second last candle wick, bring it up to that midpoint. Now we can see what's happening in that market. We know we have consolidation at the top side of resistance, but it can still drop down within that area of that wedge pattern that we created. We can see that pattern forming right below price for that first, second, third, fourth. Market broke, came back to retest, see if it's going to break out. Walking down to the daily. So market's getting very choppy. We'll do our best to dissect the market. Huge gaps in the market. So what happened? Market identified, it hung out on that midpoint. So market broke, came back to retest, pushed up to a high, came back to a retest, this previous level. And if it follows up with a bullish green candle, you see the break and retest, market's working its way up. And that's a W. So let's do it again. So that first, second, third, fourth retest, is it going to push up? Walking down to the 4. So now we're on a 4-hour time frame. We're going to add our zone. Also, we're going to add our midpoint. And let me see. So adding the midpoint between the SR lines, a little bit above, a little bit below. So let's take a look at what happened in that market when that market went through that zone. So this is identifying that huge gap in the market. Market spiked up to the top of that zone. Identify a single top and a retest, came back down through that zone, and that's market just hanging out. Now, is it going to identify a break and retest to push down further, or are we receiving bearish red candles to drop that market down further? Bearish red candle, 3-hour time frame, same candle, same as the 2 bearish red candle. Now, 1 hour, we have a push, breakdown. The second last candle is a retest, still consolidation. Same as well on the 45-minute time frame. So you're looking for an engulfment to the last few candles in the market, which is pricing second. Okay, guys, this is Cam Jones, FX Daily Analysis. Thank you for watching and thank you for your attention. SJR stock.